Hello friends, today we will discuss unit 4 depreciation chapter. Okay, so what is the meaning of depreciation? Simply I'll tell the example. Okay, so if you are purchasing bike now, okay, for 1 lakh rupees, so after 2 years or 1 year you are going to sell for direct 1 lakh rupees. I purchased for 1 lakh rupees today. So after 2 years, same bike I am going to sell it for 1 lakh rupees. No, I am not going to sell. And the person who is taking also, he will not take for 1 lakh rupees. We may sell for 50,000 or 40,000. Why we are reducing the amount? Why we are not selling for 1 lakh means because we are using that bike, right? When we are using, automatically we will get some repairs automatically. Something will be happening to that particular vehicle, right? Automatically busy because of physical wear and tear, the value or quality of the bike will decrease. That's why they are not ready to purchase at the original amount 1 lakh rupees, right? So the decrease from 1 lakh rupees to 40 or 50,000 we are selling, right? How much difference is there? 40 to 50,000 difference is there. This difference, whatever decrease in the value is there, right, that is called as the depreciation. What we are calling depreciation is simply nothing but what? Decrease in the value of an asset. So it is simply the reduction of value or lost value or expired utility or a permanent fall in the value of the fixed asset due to the wear and tear of those assets in the business is called as what? Depreciation. So depreciation may be having different reasons, that is causes of depreciation. From the theoretical point of view, it may be internal reasons may be there and external reasons are there. So under internal reason, due to physical wear and tear of fixed assets, no use of fixed assets, no proper maintenance, change in production pattern, technological development is there, restriction of by the government, reduction in demand. These are the internal reasons. Okay, what are the external reasons? Means due to new inventions, improvements, change in the fashion, taste and preferences of the consumers, automatically the new technology, whenever it is emerging, the previous one will become the old. Okay, due to slip away of the value of intangible assets, due to abnormal losses. These are the external reasons. You can go through the theoretical part. Okay, next you can see objectives are there. Okay, to calculate the proper profits of the business, to show the assets real value, to have some incidental advantages, tax advantages. These are the objectives of providing depreciation. See, factors affecting depreciation is very important from the examination point of view. So what are the factors affecting the depreciation? Means original cost of the asset, expected working life, expected scrap value, repairs, probability and probability of obsolescence. Okay, see, next difference between these three are very important, that is depreciation, amortization and depletion. At least read five points. Okay, next one you can see depreciation methods. We are having 9 depreciation method, that is straight line method. See, another method for the straight line method is original cost method, equal installment method, fixed installment method. In the exam, any name can be used in the examination. Okay, while doing the problem, remember, straight line method, original or equal or fixed installment method, all are same only. Next one, diminishing balance method or written down value method. These two methods are there in the from the examination point of view. Okay, remaining are there, just you have to learn from the theoretical point of view. Third method is annuity method, depreciation fund method, sum of years digit method, revaluation method, insurance policy method, depletion method, machine or rate method. These are the 9 methods we are having for the calculation of depreciation. But from the examination point of view, very important, and we are having in the syllabus only 2 methods, that is original cost method and diminishing balance method. Straight line method, he is going to ask in the 4 marks or 12 marks theoretical part if he is giving. Okay, once go through the straight line method and its advantages, and you can see this one also. Diminishing balance method. Okay, disadvantages, diminishing balance method and its disadvantages. Okay, now we will go through the straight line method and diminishing balance method problems. Okay, now we will start with the problems. So we are having different methods of depreciation calculation, but from the examination point of view, we have given only 2 methods, that is a straight line method, which is also called as fixed or equal installment method, and second one is the diminishing or written down value method, right? So what is the difference between these two? We will come to know if we are doing the problem. Okay, in the examination any method can be asked in. Okay, so we will do one problem same problem in the straight line method and diminishing balance method, so that you will understand what is the difference. Okay, see, a company purchased plant and machinery for rupees 1 lakh on 1st January 2018. Rate of depreciation is 10%. Calculate depreciation for 3 years. How many years? 3 years we have to provide. Under straight line and written down value method, accounts ends on 31st December every year, means end is given is 31st December, means starting will be January. We have to remember, end will be December, means starting will be January only. Okay, now how we are going to do this problem in the straight line method and diminishing balance method, we will see. First we will do in the straight line method. This method, another other names for this method is fixed installment method or equal installment method. Okay, format is simple, that is date particular amount debit side, and credit side also date particular amount. So first what we have to do, for how much we have purchased, that one we have to record. What is the date? 1st January 2018, end in 31st December 2018. Okay, so to bank we have to write. Whenever we are purchasing machinery, we have to record to bank. For how much we have purchased? 1 lakh rupees, right? Only one machinery is there, so we are writing only one machinery. Next, we are same, we have to provide on 31st March depreciation. So by depreciation, how you are going to calculate depreciation? 1 lakh rupees into what is the rate of depreciation? 10%. So it comes to 10,000, right? 10,000. If you are calculating 1 lakh into 10 percentage, so it comes to 10,000. Now what is the biggest amount this side, right? So 1 lakh, first year completed, right? This side also 1 lakh rupees. So 1 lakh, leave some gap. Okay, 1 lakh minus 10,000, 1 lakh minus 10,000, it comes to 90,000. So this is what? Balance. By balance carry down, by balance carry down, this is carry down. Okay, for how many years he asked? 3 years, right? 2018 we have to prepare, 2019, 2020. So we are preparing for 2019 January it will start, 31st December 2019 it will. Okay, any new machinery is there? No. So we have to carry this balance. To balance brought down, how much? 90,000. Now we have to provide depreciation. By depreciation, see, under straight line method, once you are calculating the depreciation, same amount you can write down, no need to calculate again. Okay, how much? 10,000. So next year also 10,000. So total is how much? 90,000. This one is also 90,000, biggest amount. 90,000 minus 10,000, it is 80,000 we need here. So this is balance. By balance carry down. Okay, this is 80,000. Next, years starts with 2020 January, ends in 31st December 2020. Next we have to brought this balance this side, right? We have to balance brought down, how much? 80,000 is there, right? Next, by depreciation third year, how much? 10,000. I told you, right? Directly you can write 10,000. Once we are calculating depreciation, next years you can carry the same. So total is how much? 80,000. Here also 80,000. 80,000 minus 10,000, it is 70,000. So this is by balance carried on. By balance carried on, how much? 70,000. Next year you have to record to balance, this is 2021, to balance brought down 70,000. This much you have to do, because only 3 years he asked, 1 2 3 years we have completed. Okay, next same problem we will do in diminishing balance method. What we will get, we will see. What is the balance here? We got 70,000. See, when you are doing in the another method, you will get different answer. Okay, same problem. So 1st January 2018, 31st December 2018. What is the difference? Means in diminishing balance method, we are going to calculate here 10,000 once we calculated, right? Same amount next year also we carry down 10,000. But under written down value method or diminishing balance method, on the balances we are going to calculate. See how we are going to calculate. First we are going to write to bank. How much, guys? 1 lakh rupees, right? 1 lakh rupees. What is the depreciation? By depreciation, how much? If you are calculating 1 lakh into 10%, that is 10,000 rupees, right? Next we have to wind up 1 lakh, this side also 1 lakh, big amount. Okay, What is the balance now? 1 lakh minus 10,000, this is 90,000, right? 90,000 by balance carry down. Till here you know very well. Next, what you have to do? 2019 January ends in December 2019. You know this one, to balance, you have to carry this balance to balance brought down how much? 90,000. Now what you have to do means, by depreciation you have to provide. But while providing depreciation under diminishing balance method, till now what we did, once we calculated the 10,000, and again we have taken the same amount. That's why it is called as what? Fixed installment method or equal installment method. But in under diminishing balance method, on the balance only you have to calculate the depreciation. Now no need to carry 10,000. Again what we have to do, we have to calculate on balance, that is 90,000 into 10%. How much you will get? 9,000, right? See, 90,000 into 10%, it is 9,000. How much? 9,000. What is the total here? 90,000. This side also 90,000. 90,000 minus 9,000, 81,000 you will get. This is what? By balance carried on. Next what you have to do, you have to carry the balance 2020 to balance brought down how much? 81,000. Okay, 81,000. Now next, December 2020 by depreciation. Again we have to calculate on this balance only, 81,000 into again 10%. So how much you will get? 8,100. 81,000 into 10%, if you are doing, you will get 8,100. Okay, 8,100. So total is how much? 81,000. This one also 81,000. 81,000 minus 8,100 minus 81,000. So it is 72,900 is the balance. 72,900 by depreciation, sorry, by balance carry down how much? 72,900. See, 3 years completed. Just we have to carry balance 2021 January to balance brought down how much? 72,900. So 3 years this problem also completed. But what is the balance we got? 72,900. But under this one we got 70,000. So what is the difference means, under straight line method, once we are going to calculate depreciation, same amount we are going to minus every year. But under diminishing balance method, every year you have to calculate on the balance amount. See, here also balance amount we have calculated. Again on this balance we have to calculate the depreciation amount. Okay, hope you understood. Next we will do the one long problem. Okay. Hello friends, now we will start with the problems. Okay, long problems. So first we will do this problem, which is a previous year question. A company whose accounting year is financial year purchased on 1st July 2013 machinery costing 40,000 rupees. So on 1st July 2013, a company purchased a machinery for rupees, how many rupees? 40,000. It purchased a further machinery on 1st January 2014. Again on 1st January 2014, it purchased another machinery, that is we can call it as a second machinery, for rupees 20,000, and on 1st October 2014 costing 20,000 rupees. It means third machinery again purchased on 1st October 2014, rupees 20,000. On 1st April 2015, so on this date, 1/4 of the machinery, means 1/4 of the machinery was which is installed on 1st July 2013 became obsolete and was sold for 3,000. See, on this date, the machinery which is purchased on 1st July 2013, that is first machinery, become obsolete, means useless, and it is sold for how many rupees? 3,000 rupees. Actually we purchased for how many rupees? 40,000, and we sold for 3,000, but not the whole machinery, but only we have sold 1/4, means remaining there in the company, that is 3/4 machinery is still remaining in the company. Show how machinery account would appear in the books if machinery was depreciated by fixed installment method, means original cost method, at 10% per annum. So whenever the problem is given like this, first what you have to do means, in the depreciation problem you have to write down like this. So first of all you have to look at whether it is given financial year or calendar year. We are having 2 years, right? Calendar year starts from January and December. Every time you have to purchase on January and you will calculate depreciation in December. Okay, if it is given financial year, that it starts from 1st April and ends in 31st March, means every time you should purchase on 1st April and you are going to calculate depreciation on 31st March. See, if you are not purchasing in calendar year on January, any another month, take an example of March, April, anything you are purchasing apart from January, you have to calculate months calculation will be there. If you are not purchasing on April, actually the year starts in the financial year on 1st April, right? If you are not purchasing on April month or in April month, you have to calculate months. Any other months if you are getting as a starting, then you have to calculate the months for the depreciation. Okay, so for us it is given financial year, means it starts with April and ends in the 31st March, means April. So suppose April 2015 is there, here ends in 31st March 2016. Next year starts 2016 April, ends in 2017 March. Okay, our year started in 2013. See, first machinery like this you can write. First machinery we purchased on 1st July 2013 for rupees 40,000. So actually financial year starts in April. So how many months we are using, for that many months only we are going to calculate the depreciation. April we have to purchase, but we purchased in July, means April, May, June, 3 months we have not used the machinery. Total how many months we used? July to March. March is the ending, right? How many months? 9 months only we use it. So into 9 by 12 we have to do. Second machinery 1st January 2014, that is we purchased for 20,000. Again we are purchasing on 1st January, means January to March only 3 months we are using, so 3 months calculation again is there. Next, third machinery on 1st October 2014 we are purchasing for 20,000 rupees. So October means October to March, again months calculation is there, because we are using that machinery only for 6 months. So on 1st April 2015, right, we sold 1/4 of the machinery which is purchased on 1st July 2013. 1st July 2013 means that is first machinery we are selling for how many rupees? 3,000. Remaining is how much, guys? 1/4 sold, means remaining 3/4 is there with us only. What is the depreciation percentage given? It is 10%, because it is fixed installment method. We are going to calculate on the total balance only. Okay, now we will start the problem. Okay, now when you see the problem, what is given? First of all, write down like this: machinery account. Year starts with what, guys? Our year starts with, you can see here, 1st July 2013, right? Year is given 2013. So financial year starts when? 1st April to 31st March 2013, 1st April, and ends in 31st March 2014. But first machinery we purchased when? 1st July 2013 for rupees 40,000, right? So write down 1st July. 1st July we purchased first machinery. You have to record it as to bank. First machinery amount is how much? 40,000. Okay, next, depreciation we have to provide, right? So depreciation, by depreciation of first machinery, what is the amount of first machinery? 40,000 into what is the percentage given? 10% depreciation into how many months we are using here? Only 9 months. So into 9 by 12. If you are calculating, see, 40,000 into 10% into 9 by 12, if you are doing, you will get 3,000. Okay, 3,000 amount I have written here. Next, now see, within this year, 1st April 2013 to 31st March 2014, any another machinery is purchased. So January comes within this year only, right? So again second machinery is also purchased in this year only. So we are going to again write 1st January to bank. Second machinery, for how many rupees we purchased? For 20,000. So we recorded 20,000. Next we have to provide depreciation for second machinery, right? So by depreciation second machinery, how many rupees? 20,000 is the amount into 10% into how many months we used? Only 3 months. So into 3 by 12, how much we are going to get? 500 rupees we will get. Now what we have to do the total. Here we will get 60,000. Here how much we are getting? 3,500 only. So total is, whichever is higher we have to write that one, 60,000. Here also we will write 60,000, big amount. So 3,000 plus 500 only, right, this side. 60,000 minus 3,500, how much you are getting? 56,500. This is what? By balance carried on. What we are writing? By balance carried on. So if you want to if you don't want to get confused, you can write like this also. From first machinery, how much? 40,000 minus 3,000, that is 37,000, and second machinery 20,000 minus 500, 19,500. Combinedly you will get 56,500. Okay, so first year completed. Next come to the second year. Okay, next year starts with March 2000 completed, right? 1st April 2014 and ends in 31st March 2015, right? Next, what you have to do? First you have to carry the balance. To balance carried on this one, right? 56,500 we wrote. Okay, next one, any machinery, new machinery purchased in this year, we have to check. See, only three machineries, right? First October will come in this one only, right? April to 31st March only, so we will calculate this one. Okay, so we will write 1st October to bank, third machinery, how many rupees? 20,000. Okay, next, remaining depreciation as it is we have to show. By depreciation, first machinery, what is the first machinery amount? 40,000. So directly in the fixed installment method you can write this amount if months calculations are not there. If months calculation is there, means automatically what you have to do? Again you have to calculate. Okay, because without months we have to calculate. Okay, by depreciation, actual amount is 40,000 into 10% is the depreciation rate. So calculate, if you will get for 4,000. By depreciation of second machinery, how much? 20,000 is there, into 10%, that is 2,000. Now we have third machinery also, right? When we have purchased third machinery on October, so we are using only 6 months, so this is the new machinery, months calculation is also there. By depreciation of third machinery, 20,000 into 10% into 6 by 12, how much you will get? 1,000 rupees you will get. Now do the total, 56,000 and plus 20,000, that is 76,500. both side we will write big amount. Next, how much it is coming? 4,000, 6,000, 7,000, 7,000. So big amount minus small amount, 76,500 minus 7,000. if you are doing 69,500 you are going to get, that is by balance carried on. What it is? By balance. Okay, by balance carried on. Next, third year starts when? It ends in 2015, right? 1st April 2015 and ends in 31st March 2016. In this particularly he has not given how many years we have to prepare, so whenever last year is given, that is 2015, there we will stop. Okay, so this is the last year. Okay, now what we have to do, guys? Then again we have to carry down this balance rates to balance carried on. How much amount? 69,500. Okay, next we will see any new machine is there? No, only 1 2 3 machines are there, but one thing is there in 2015, that is first machinery which is purchased, we sold in the April. Whenever sales is there, three things you have to remember. First we have to write the sale amount, then if only 1/4 whole machinery is sold, directly you can write the sale amount. If remaining machinery is there, you have to provide depreciation for the remaining machinery, and you have to calculate the profit and loss on that particular machinery also. Okay, so on 2015 we are selling the machinery. What is the sale amount, guys? How much we sold? It is sold for 3,000. As it is we will write down. First machinery we are selling for 3,000, but with how much? Only 1/4 of the machinery. Remaining how much is there? 3/4. Means actual amount of first machinery is 40,000 into 3/4. Remaining is how much, guys? 30,000 is there. On this 30,000 you have to calculate again 10%. So 10% you will get again 3,000, right? 3,000 you will get. Now what you have to do? You have to calculate the profit and loss on this particular machinery. Now how to calculate this profit and loss we will see. So first, book value is how much, guys? We purchased the machinery, first machinery, for 40,000. 1/4 is sold. 1/4 is sold means only 10,000 you will get. 40,000 into 1/4 you will get 10,000 rupees. Remaining is how much? 30,000. We know that one. Okay. So what is the book value? First you have to record book value. Book value of 1/4 machinery is 10,000. You have to do the less depreciation. First machinery. What is the depreciation, guys? You can see here. Depreciation of first machinery 3,000, but this 3,000 is for how much? Whole machinery, but we sold how much? Only 1/4, right? So what you have to do? 3,000 into 1/4 you have to do how much? 750 you will get. So first year how much? 750 rupees. Next, second year depreciation of first machinery. See, second year depreciation of first machinery how much? 4,000 is there. It is also for whole machinery, but we sold only 1/4, so calculate 1/4. So how much you are getting? 1,000 rupees. Second year 4,000, sorry, 1,000 rupees 1/4 if you are doing. Third year anyhow we are selling that machinery, remaining depreciation we calculated, so no need to calculate. So total is how much? 1,750 minus 1,750. How much you are getting? We will see. 10,000 minus 1,750. How much you are getting? 8,250, right? Less what you have to do? Less sale amount. Sale amount. For how much we sold? We sold for how much, guys? 3,000 rupees, right? We have to minus this amount, 3,000. So how much you will get? 5,250. This is what? P&L amount, that is profit and loss on machinery. We got what? Loss on machinery. Actually how much? For how much we have to sell? 8,250 we have to sell, but we sold for how many rupees? Only 3,000 rupees. This is what? Loss on sale of machinery. So we have to record here. See, if profit you are getting, you are going to record this side, debit side, and loss is there, so we will write loss on machinery, that is 5,250. okay, first machinery calculation completed. Now second machinery is there, right? We will calculate by depreciation on second machinery. See, second machinery already how much is there? 2,000. So without months is there. This is fixed installment method. Without months we can directly take, right? 2,000, because it is, if you are calculating also you will get that amount only, 20,000 into 10%, because every time you have to calculate on the total only 10%, that is 2,000. Next, by depreciation on third machinery. Third machinery months is there, so without months we have to calculate again. 20,000 into 10%, how much you will get? 2,000 you will get, right? Now anything is there? No. First machinery sold, second machinery we calculated, third machinery also we calculated. Now nothing is there. Now we have to do the total. We will do total from this side. How much? 6,000. okay, 6,000 plus 5,250 plus 4,000. okay, 2 plus 2, 4,000. It is total how much? 15,250 I am getting. okay, next this side how much we are getting? This side third machinery we didn't wrote, right? Yeah, third machinery is there, right? We forgot to write third machinery to bank. No, third machinery completed, right? Yeah, third machinery completed. It is total only 69,500 minus this total is 69,500 is the total amount. So first we will write down totals. okay, 69,500, 69,500, big amount is there, that's why I am writing both the sides 69,500. This side what it is? 15,250 only, so less amount is there. Big amount minus small amount, 69,500 minus 15,250. How much we are getting? 54,250 is the balance. So write down 54,250. This is what, guys? By balance carry down. okay, by balance carry down, sorry, this is balance brought down, right? Balance carry down. Next what you have to write? Just you have to write to balance brought down 54,250. Date you can write 2016 1st April. Here it ends with 2017 March 31st March. okay, so this is how you have to do the depreciation problem. okay, see guys, you can practice written down value method, that is diminishing balance method problem. I am showing the answer also, so you can practice this one. If you are practicing these two method, it is enough. Okay, see, this is the problem, and you can see the calculation of profit and loss of a machinery also. This is enough. Okay, hope you understood. Practice well. Okay, thank you.